Hello, everyone. All right, let's jump right into what's been happening with BigBear.ai because the action around this stock has been nothing short of intense. Over the last couple of days, the market has thrown us some exciting plays, and BigBear.ai has been right at the center of it all. Just yesterday, we walked away with around a 7% gain on AMD and another 1% from an inverse semiconductor trade. But today, the real spotlight is on BigBear.ai, which is popping nearly 8% and climbing right up to the $7 mark. That kind of move gets people paying attention fast, and it's creating a lot of buzz across traders and investors. Now, while all of this is happening in the markets, behind the scenes we've been grinding late into the night working on something new, an AI-driven application designed specifically for stock analysis. This tool is breaking down data faster and cleaner than ever before, and it's giving us an edge when watching moves like Big Bears. So as I'm looking at the ticker right now, we're seeing Big Bear trade around 6.94, which is actually a key milestone for them. Why? Because this price level basically erases all the losses they took after their earnings back in August. They've made a full comeback to the point where the stock is now trading even higher than where it opened on that earnings day. That's not just a bounce, that's a meaningful recovery that shows confidence coming back into the stock. If you've been with us on this journey, you'll remember we started following Big Bear back in October, when the stock was floating around just a single dollar per share. From there, the company rocketed all the way up to nearly $10 in February before falling back down along with the broader market through the spring. But here's what's important. Throughout the summer, the stock managed to hold its ground at the 200-day moving average, and our own long-term position, which sits at an average price of about $2.80, has been steadily climbing in value since then. So, what's actually driving this? Well, part of it comes down to the new technology Big Bear is rolling out. This isn't just hype, they've been making real progress. If we go back to early September, Big Bear had been stuck in a long downtrend, just consolidating sideways. But then, we got the reversal, all we were waiting for. The stock started to break out, pushing higher through mid and late September, forming a series of higher highs. Think of it as stair-stepping upward, with each old resistance point now turning into new support. That's classic bullish momentum. And on top of that, we've got the added fuel of rate cuts, which are giving growth stocks across the board a bit more breathing room. Right now, one of the key levels I'm watching is around $6.30. That was a resistance before, and now that Big Bear has broken through it, it could act as a strong support level moving forward. You can also see validation around the 6.45 to 6.55 range, areas where the stock has paused, pulled back, and then pushed higher. These are the stepping stones of a bull trend. Now, on the day-to-day level, we've seen some natural pullback. Earlier today, Big Bear ran up as high as $6.94 before dipping slightly down to $6.79. This isn't unusual. Stocks rarely move straight up without some resistance. Technically speaking, though, indicators are starting to flash signs of overbought conditions. The RSI is hovering above 70, pushing into the 72-78 zone, while the MACD is also signaling strength but teetering near those overheated levels. That tells us traders might want to keep an eye out for a breather before the next leg up. So, where do we go from here? Well, the immediate resistance sits right around $7. That's where Big Bear is getting rejected right now, and you can see it testing that ceiling multiple times. If they can break above it convincingly, the next major target becomes $7.50, and after that, we're looking at a potential run toward the $9 range. Remember, back in July, that $7.50 zone acted as a barrier, so it's not surprising that traders are watching it closely again now. But here's where it gets interesting. Big Bear's story isn't just about chart patterns. The fundamentals and institutional interest are giving this stock a lot more weight. As of now, there are over 300 institutional holders with roughly 125 million shares in their hands. We're talking big names like Vanguard, BlackRock, Citadel, and State Street. When you see that level of institutional ownership, it adds stability and shows that larger players are backing the stock. On top of that, projections for the next 3 to 6 months remain fairly bullish. Historically, Big Bear has delivered an average of 20% gains over a 3-month horizon, and with potential catalysts on the horizon in the AI sector, that trend could very well continue. And speaking of catalysts, one of the biggest we're tracking right now is Big Bear's involvement with government contracts, specifically with the TSA. They've been working on rolling out biometric systems in airports, reducing reliance on manual checks, and enhancing threat detection with AI-powered tools. This isn't just speculation, it's already happening. Kevin McAleenan, BigBear's CEO, who previously served as the acting Secretary of Homeland Security and Commissioner of U.S. Customs and Border Protection, has been instrumental in pushing these deals forward. His background has given BigBear a direct pipeline to government contracts, and the results are visible. Their computer vision technology, branded under TrueFace, is now actively deployed in major airports. We're not just talking about one or two locations. They've rolled out in LAX, Nashville, Denver International, JFK in New York, Chicago O'Hare, Dallas-Fort Worth, Seattle, and even internationally in places like Vancouver, Montreal, and Heathrow in London. That level of deployment shows that this isn't a small pilot project anymore. It's becoming a global security solution. Now, whenever you see this kind of hype around a stock, you've got to be careful. There's always the risk that too much noise leads to unrealistic expectations. And let's be real, BigBear's balance sheet still has some weak points. Revenue dropped 18% year over year, and net income fell sharply. But here's the silver lining: their total assets actually increased. On paper, the losses looked worse than they truly were, and some recent deep dive analyses suggest that the fundamentals may be stronger than headlines make them appear. So, circling back to the charts, BigBear is sitting just under that $7 resistance level. If they hold support around $6.50 and continue to ride this bullish wave, we could see another run higher. But if they get rejected too strongly here, a short-term pullback might be in the cards before the next breakout attempt. For traders, that means the open next week could present some fresh opportunities. A pullback to support with a bounce would make for a solid entry point. To sum it all up, BigBear.ai has made an impressive recovery from its earnings dip, climbing back to nearly $7 a share. Technicals suggest short-term caution due to overbought signals, but the bigger picture shows bullish momentum, supported by institutional backing and government contracts. With AI adoption accelerating and biometric security expanding worldwide, BigBear has some strong catalysts lined up. The question now is whether they can break above $7 and start aiming for that $7.50 to $9 range. Either way, this stock is definitely one to keep on your radar going into next week's trading sessions. Subscribe to my channel. This is not financial advice.